Jim Rogers believes that this has been an exciting year, regardless of whether you live in India or America. Global markets have been volatile. The real worth of Bitcoin and other cryptocurrencies has boomed. He said that he is not a crypto enthusiast, but he enjoys commodities. This year, Jim has not sold anything. If you are new to our YouTube channel, please subscribe and click the notification bell to avoid missing new content. The Dinero Association will regularly add videos to keep you updated on the latest in business and finance. Jim Rogers, the upcoming bear market will be the worst in history. James B. Land, also known as Jim Rogers Jr., is an American business entrepreneur based in Singapore. Rogers is a renowned investor, author, and financial analyst. He is also the chairman of Rogers Holdings and B. Land Interests Incorporated, and the Rogers International Commodities Index developer. From an early age, the intelligent businessman displayed his commercial abilities. He began his own business of selling peanuts when he was only 5 years old. He went to Oxford University to study economics, philosophy, and politics before joining Arnold and Isblack Roeder, where he would meet George Soros, his future business partner. And even though he was a genius at investing and managing money, he wasn't solely collecting fortunes. There's a lot more to this extraordinary individual. He had a long-held dream of riding his motorbike worldwide, which he fulfilled between 1990 and 1992. Jim Rogers has seen 3 bear markets over the previous half-century, but he believes the largest is yet to come. The next bear market will be the worst in my lifetime, he said in a recent interview with financial consulting firm Wealthian. Rogers has long been a bear on the US stock market. On the other hand, the multi-billionaire knows a thing or two about making money in bad times. In 1973, after a severe bear market, Rogers and George Soros co-founded the Quantum Fund. Between then and 1980, the portfolio returned 4,200%, compared to the S&P 500's 47%. Silver is popular with investors as a haven and a hedge against rising interest rates and inflation, and simultaneously, it is a widely used industrial metal. For instance, silver is a critical component of solar panels. As solar energy consumption increases, demand for gray metal may increase even more because rising prices benefit miners. Wheat and precious metals, Pan-American silver, and Kerr mining are the easiest methods to profit from an anticipated silver boom. Because an electric vehicle consumes several times the amount of copper that a combustion engine vehicle consumes, he explains, there will be a significant demand for some of these metals that we previously lacked. Investors may utilize copper miners similar to silver miners to expose the commodity. Rio Tinto, Freeport-McMoRan, and Southern Copper are just a few of the corporations poised to benefit from the copper boom. To be sure, numerous copper mining companies' stock values have already climbed dramatically. The Global X Copper Miners ETF has increased by more than 80% in the past year. If you're hesitant to buy at a premium, you may begin with digital pennies and build your copper wealth. The financial markets seem unpredictable. Several bizarre events have occurred in marketplaces globally in the last 6 months or a year. The Nasdaq doubled in 6 months toward the end of the 1990s, and it always has. People are happy and ecstatic when things seem to be getting better and want to participate, leading to odd behavior. This is known as a blow-off in the United States. The market improves and jumps. Few expect this to happen again. It's happened before, and it'll happen again if markets start printing again. Every government wants rigorous control over its industry, whether agricultural or other. Politicians are like that. China has been trying to cool the raging housing market. Several Chinese cities had a massive bubble forming, and they were doing the right thing by defeating it. Will they be able to contain it? Or will it explode? Nobody knows. Throughout history, most governments have failed to maintain control during slowdown events. Central bankers panic when things worsen and do all they can to rescue the bubble, the bull market, and wealth. Consequently, if the markets crash due to a new virus or anything else, they'll panic and interfere to save us all. The US dollar is often seen as a haven in bad times. The US dollar is not a haven owing to its historical importance. Naturally, the virus is disrupting supplies. Staffing is becoming scarce. Let America be a wall. These days, farm workers are in short supply due to anti-immigration sentiments in many countries and the inability to work due to illness. The collection will eventually become an issue, so commodities are expected to rise. The next bear market will be the worst in our lifetime. When we have another bear market, and it will be the worst in our lifetime, said Rogers. To be clear, he is not claiming that the US stock market has already turned bearish, nor that he knows when it will, but that the continuous sell-off has not surprised him, and that he expects it to continue until the Federal Reserve raises interest rates. Mr. Rogers admits he's a lousy market timer, but sloppiness may continue when interest rates rise, and the market appears to recover. The market has gone up for far too long, far too rapidly, Rogers wrote on his blog, and there are concerns in Washington about the government. What's more, given Mr. Modi's recent proposal for a capital gains tax, India will almost probably be damaged more than other markets, Rogers said recently on his blog. But before you panic and abandon the markets, remember that this isn't the first time Rogers has mentioned the worst market disasters ever. He's been saying that since 2011. The difficulty is that he is not alone in expressing this. Tom Forrester of Forrester Capital Management, Philip Parker of Altair Asset Management, and David Stockman, former Reagan White House budget director, have chimed in. Maybe everyone is worried since the last global down market was in 2008 to 2009, followed by an unusually lengthy bull market. Please share and like this content and let us know what you think by typing your comments below. Keep your notifications open and I'll see you on our next video.